Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Peterson.
Thank you for joining us. This is the Real Estate Risk Report. I am your host, as always, Lance Peterson. So once again, I have Ryan Parson with us, but today we've got an exciting show. There's a big announcement, an official announcement that's occurred as it pertains to Ryan. We have had him on the show a handful of times now, and he's a regular guest. And the reason we bring him on is because he helps us sort of pan out, get out of the weeds of all the deal level risk and, all of those sorts of things that we usually talk about with our guests, and kind of pulls us out to look at more of the, our wealth and more from a more holistic standpoint, right? And how we view that and the risks that occur kind of at that level. But, we've been introducing Ryan as the founder and the head of the Mile Marker Club. And now they have made a transition to becoming a federally covered registered investment advisor, and they now go by the name of Sunlight Peaks. So welcome, Ryan Parson from Sunlight Peaks. How you doing?
Thank you very much. I'm doing great. Thank you very much for having me back. It's always great to be with you and with your community, Lance, of vetted deal sponsors on the Verivest platform and the high net worth investors that participate with you. So always glad to have these great conversations with you of really what's happening in the marketplace and what's happening in the world of the high net worth families that are investing in the real estate space today.
Yeah. So today we're going to kind of talk about this transition that Ryan and the group has gone through. They really, at the heart of it now, are really more of a multifamily office, right? So their clients are families who have accumulated wealth, over their lifetimes and are in a position now where they may have, between 3 to 30 million plus of, net worth and they're trying to figure out, how can they, manage the affairs of this wealth now that they've accumulated and ensure that they're sort of protecting themselves and ensuring that they have, the legacy that they leave and, all sorts of those things, right? Because once you have this stuff, that's why we call it like a family office, is that now all of a sudden it's the business of the wealth that you have to deal with. And so Ryan and his team, are able to take these pooled resources and really help these families do this, which is why they made the transition to becoming an investment advisor. So today we're going to kind of talk about change management, the importance of communication in general, but specifically as it pertains to these alternative investments, which is, I think, something that we talk a lot about, but that gets sort of, I think, watered down. Everyone says, communication is really important, but no one ever really spends enough time talking about what does good communication look like. And sort of using, Ryan's example and even mine too, in our journey of my day job at Verivest of rebranding from one thing and becoming Verivest and adding services and dealing with investors and clients. And, you're trying to communicate these changes in the value proposition and what you do and how you do it and why it matters and why it's important in a world that's super noisy. Right. There's just, you're competing with lots of different messages and those things. And the other thing we're going to hit on is also just to take the opportunity to really talk about the regulatory environment, right? Because, it's easy to sit here and say that Ryan went from running an investment club to now becoming an investment advisor. But, there's so much more that goes into it. And ultimately, the decision, which Ryan will share with you, is, and the reason they do it is so that they can better serve their clients, right? And those that look to Ryan and their team to do that. And it really is around, this notion of investment advice, right? I mean, the ability to really tailor what you say to a client, really hamstrung if you don't sort of become a federally covered investment advisor, but there's a lot of compliance and things that go along with it, which, there's some good and there's some bad, and bad just meaning, more work and extra stuff you have to deal with that you wouldn't otherwise. So Ryan, why don't we just start with kind of this notion of communication, right? And just you having gone through this big change now, and just, and maybe from an investor's perspective, or passive investors looking at these things, just, I think realizing that, when you're looking at deal sponsors or opportunities, and just maybe helping them be a little more articulate with what they mean when they say they appreciate good communication. Give you some of your examples of you making a transition with your clients who are investors from one thing to the other. What are some of the learnings you took from that? And maybe, if you could do it over again, you would have done differently.
Sure. Yeah. And Lance, again, thanks for having me, and thanks for presenting it in this context and framing it this way, because communication is a very broad topic, and it's one of the so many things I appreciate you and your team and what you're doing is to really understand this wide array of issues that impacts us as high net worth families and deal sponsors too. And that element of communication, when you think of the day and age that we live in, I mean, we got our constantly on our phone, on our instant messaging, on our machines, we're, a lot of us are working virtually, running our businesses virtually, our families are all over. So this idea of communication is really gotten kind of blended in, or maybe blurred with just all things info that hit us. Yeah. And, when we look at communication, or when I think about communication, the way you're framing it up here, Lance, is that from a client standpoint, or your customer, whatever business that you happen to be in, because of this breadth of information that's getting communicated to all of us from all different means and all of that, the people who we have the closest relationships with are the ones that require the greatest level, and I'm going to say over communication. Yeah. Lance, it's you and I have known each other for the better part of a decade now, maybe even a little longer at this point. And, we think about, I can always say, gosh, I know I can see what Lance is doing. I get great emails from your team on a very routine basis. So I can see your new deal sponsors that you vetted. I can see communication, different topics that you're talking about. But I really know what you're doing when I talk to you, and you and I obviously have share a lot with our respective businesses in terms of how we better serve our respective clients, our respective customers. But it's very deliberate about how you and I just communicate with each other. But from our customers, that next sphere around us, maybe beyond our families, of course, it's almost an over communication. And sometimes as entrepreneurs, or just really anyone, we go, well, we don't want to bother our customers, or, we've said what we've needed to say, and we've said it in all this. But in communication today, because we're virtual, it seems like we're not always face to face anymore. And especially, not having events and trade shows and industry events where, we're coming together face to face as much as at least we did back in a day. Hopefully that, returns, are at some level anyway. Yeah. But we don't have that constant feedback loop to know, how is our messaging being received. And, we're super excited to be, operating everything we've ever done under Mile Marker Club. We still do under Sunlight Peaks. We can just do so much more of it today, which has all been in response to the existing families we serve and the members that we were serving, and now clients we serve, and just, really listening to our customers and understanding what they want, but also, what we as a team really love to do, and really being honest with ourselves and intuitive with ourselves of what we want to be, the lane we really want to run in and serve to best serve our clients. And, that was really, part of that. And, the whole registration piece, Lance, and I know you've been through that in other areas before in your past, and certainly are aware of it. The being a registered investment advisor is a very broad registration with the SEC, and it covers a whole realm of different types of businesses that require it if they're offering certain types of services to the public or to the customer. And as our clients' needs really determine our path, and where our clients were asking us to go, it was just a necessary thing to be able to do, but to truly operate in the way we wanted to be able to operate. And so when you hear investment advisor, for us, Lance, it's so much broader than that, because investment advice really is a broad context in and of itself. But for, I think, the investors that you serve in your Verivest platform, certainly the investors and the high net worth families that we serve here at Sunlight, for us, it's really about more comprehensive, advanced type of financial issues that impact our clients. And you've mentioned some of them, from estate planning, charitable giving is another big thing, business succession planning. A lot of, I know a lot of our mutual customers, Lance, they've run some sort of small business and built some sort of a small business, and they're getting ready to sell it, or, transfer the reins, so to speak, over to a family member, business succession planning, obviously, different things related to tax and estate law, self-directed IRA, just all of those things, for us to do what our clients were asking us to do, all fall under that, registered investment advisor, which some of those things, sometimes a lot of things don't really even have anything to do with investments. It's just that what we need to be able to do to have good, honest communication on a one-on-one basis with a client to help make good decisions and not miss out on, opportunities, and try to correct issues as they're discovered inside of a plan, and based on past decisions that were made. And so that idea of communication, just as we've experienced it going through this process with our clients, I think the best thing I can say, Lance, is in this day and age, over communication is probably not a bad thing.
Yeah.
But that requires a plan in and of itself too. And I think those are some things that I've just, started to learn, and or I realized, I should say. And I don't know if, things because of the pandemic, and then all this wild social and economic and political environment that's happening all around us, seems to, we just as human beings are looking more to our own advisors, our own mentors, our masterminds, obviously, from my perspective, Lance, my relationship with you, and I really look to you for your expertise and guidance. Over communication, we want to know more from those that we trust the most. And I think that's probably where I guess I'm feeling like that over communication is probably becoming more of a norm, or needs to, for those that we're really, really that closely connected to.
Yeah, I agree. And I think that, my takeaway on this, right, is that as a passive investor, I think what I hear in speaking with a lot of people who are allocating capital to deal sponsors and to syndications or funds is, and obviously these are the things I wake up every day, I'm trying to solve these root cause problems around this. But I think that the part that's sort of a bit counterproductive, like I said, is that investors spend a lot of time sort of complaining to their deal sponsors that they've allocated capital, that they're not doing a good enough job communicating, right? So they're saying your communications are poor. Well, they probably are. There's a really good chance they are. But I think it's just being a bit more specific, right? And I think it's to your point, is that the reason why a lot of people choose not to communicate is because this, there's sort of the vocal minority, right, that sort of pipes up and says, stop sending me stuff, and so you end up getting this sort of opposite effect where then you choose not to communicate. And obviously in this world of technology, some of the stuff that we've talked about with the dev team and engineering, right, is just allowing investors to kind of choose their preference, right? But a lot of deal sponsors now are sort of, they're sort of gun shy in communicating, because they don't want someone to make a big deal about it. But I think that it's when you go and you want to say you're not communicating enough, I think giving, for now, to the degree that the tech maybe isn't as robust as we'd all like it to be, it's just being a bit more specific with your sort of feedback, right? It's just saying, I'd like to know more about this the things that are going on, the property level specifically, or whatever it might be. Just specificity is good. Now, of course, it's on the deal sponsor for all of us as human beings to also be a little bit more inquisitive when someone, throws a very generalized statement at us to sort of dig. Now, it goes both directions, right? But that's communication. That's what communication's about. So like in your case, some of your members who, once again, you guys had a communication plan, you're sharing why you're transitioning. I know because I attended some of the events where you're making the reveal and, it's very thoughtful, but, you get down to the end on the date of the transition and people are still, thoroughly confused. And of course, I'm sure being in your shoes, it's just like, how can they be confused? We feel like we did everything we could. Right. And so I think it's a two-way street, and just realizing that if you're uncertain about something or you'd like certain information you're not getting, you have to be specific. You have to speak up. You have to say, in Ryan's case, it would have been, Ryan, I'd sure like to know a little bit more about what's going on. I know that you guys we're working on a transition and the club won't be a club and it's going to be an investment advisory firm. What does that mean? Right. And those sorts of things. But too often, once again, it goes both ways where we're not sharing that. We're not, that's that transparency, that authenticity, that genuineness. Like we have to realize that we all have a part to play in this. And change management, any kind, is sort of, it's always messy. It's hard when you're making any sort of, transition from one thing to the next. And I think for us, this is where even on the Verivest side, which we're going to get into in just a second, kind of the regulatory reasons why these things happen. But at Verivest now, we're sort of often confused with, well, are you just like another real estate crowdfunding website? My answer is, well, no. Well, how come? Because I then say, well, we aren't trying to sell any investment opportunities. Like no one wakes up that works for Verivest in the morning and says, I can't wait to convince people to allocate money into a given deal. That's the very thing that's sort of out of bounds. I mean, that we don't want to be involved with, because it's complicated. That's why I do this podcast. It's super complicated. And that's why I have you on, Ryan, because, my belief is that it just, every person is different. So every time, and this happens often, right? Investors will, come to me and they reach out and they email me and they say, I love the website. I love everything you guys are doing. But they're basically asking me to tell them where they should invest, right? Which once again, is they're asking me to provide them with investment advice. And my response to them is, listen, as much as I'd love to give you an investment advice, and I can obviously hide behind, my disclaimers and disclosures and, those sorts of things. The reality of it is that I know enough to know that I shouldn't be comfortable providing investment advice to people when I have limited amount of information, right? And I think that that's at the heart of what, that you guys were attempting to accomplish under the Mile Marker Club, framework, but then forced the Sunlight Peak sort of transition, right? Is that in order to really go there and really do it right, you have to have more information. It has to be tailored, right? Because the answer is it depends, right? And it's not that simple. And that's my problem with real estate crowdfunding sites. Once again, I wish no ill will on anybody, but it's just like you as the consumer of whatever they're putting forth, you cannot put all your trust and faith in one platform provider. And really, and for many, because most deal sponsors, even if they themselves are registered investment advisors, you need to understand that their clients are the investment vehicles. They're these legal persons, which are basically EIN numbers and partnerships that have been formed in Delaware. These aren't real human beings. These are legal entities that they provide investment advice to, which I know sounds weird to many of you who don't think like this, but that's what it is. They're investment advisors to entities that they control. It's a bit like, telling yourself that, it just is an odd sort of concept. Whereas for you guys at Sunlight Peaks, you are now investment advisors to real people, right? That are, it's a total different, ball game. And so I think it's important to sort of to realize that. But same thing on the communication front for us at Verivest. It's like we've realized now, having, after the rebrand and doing this, like it's water on a rock. Like we have to be very, very specific about how we do what we do, when we do it, why we do it, and then more specifically, what we don't do. right? Because the last thing I want is where someone thinks that because someone's on our website and has attained certain status and they've done certain things, that means that Lance thinks that you should put money into it, or that Verivest as a whole thinks you should put money into it. Because the reality is that I don't know. And unless I go to work for Ryan, and I go and become an IAR, an investment advisor representative that works for Sunlight Peaks, and it's my job, right, to do that. It's not my thing, right? It's none of our thing, right? So I think that's why I have you on, Ryan. These are the pieces. Verivest does a bunch of stuff. We make sure all the money's going where the money's going to go. We make sure that all the claims that people are making that are at least in front of us are legitimate and valid and can be verified. And if not, we're going to say it's not. Those are just like the guardrails. We're just making sure that everyone's at least sort of operating at the same level. But when it comes to picking and choosing investments and making investment decisions, the allocating of the money and the decision to do so, that's either on you. So you got to listen to every episode of this podcast and you got to go do a bunch more research and figure out how to do it on your own, right? Or you go and find guys like Ryan, who have been set up in a way that they can actually provide you with that holistic advice. So, because that's sort of what you're doing. Would you agree with that, Ryan?
Yeah, that's great insight, Lance, in terms of how you're describing that. And again, I appreciate how you're using, the terms that, as the SEC is defined. It hits such a wide range of different types of businesses. And how you said a deal sponsor may have to be an RA with respect to the advice it's giving to an entity, not necessarily a human being. And it's just one example of dozens and dozens that would require that type of registration. But what you're also talking about when we get it down to the human being level, and particularly the investor level or the family that's making an investment in any type of investment for that matter, it is. And when you overlay this idea of communication on it, Lance, it really starts with us as an investor or as a family investing unit, being able to communicate internally to what do you want, and that that's a big reason that clients find us, or at least seek out a firm like us, is to help draw that out and understand, what is it that they feel like they need. And an investment, do they like this type of investment? Why do they like this type of investment? Why have they never invested in it before if they've heard about it? Those types of things of communicating with ourselves as investors, and obviously we try to help facilitate that here, are really big deals. And because as you talk about, Lance, a holistic, or I might use the word comprehensive, and you use the term family office earlier here in the webinar, which I think is a really important talk about communicating and over communicating of exactly what does that mean, because I think it's a big deal for a lot of the investors that are on the Verivest platform, and just investors that Lance, are in this, kind of this space of say a $3 to $30 million net worth. Obviously there's more and there's less than that, but using that kind of for purposes of this discussion anyway, a family office is typically a family that's got, 100, 150 million net worth minimum. And they form a family office where they can hire into their family as an employee, like you said, Lance, an IAR, an investment advisor representative. They might then hire the accountant on staff. They then hire their estate planning attorney on staff inside of the family. That's a family office of running their wealth like a business. Yeah. Well, Lance, I'm not there, at least not yet. But the issues that all of us, as at least accredited investors in this space, have are the same. We have investment related issues. How much should I allocate to this? Should I even allocate to it? How many different types of deal sponsors in the same space should I have? What's the cost load of doing? That all those investment elements, and the list goes on there. And then you combine that with what we call wealth enhancement, looking at cash flow issues, the cash, the economic engine to live your best life and your life of significance. What do taxes have to play on all that, income taxes, capital gains tax, which of course there's a lot of discussion of that right now with our in Washington. And then you heap on wealth protection issues, what types of entities should I have? I mean, even today, Lance, talking about wealth protection, with our families, things like wire fraud, things like identity theft, are all these planning issues that attach our wealth. Has nothing to do with investments really, but these are just issues that affect our families. And then you look at charitable giving, all these elements. And that's what all of us, regardless of our net worth, have the issues are the same. And so what a family office would be able to hire, just because of the size, and hire all those experts on. What we really look at it today, and we were just communicating this recently at our symposium out here in Colorado, just very recently, is what I call a virtual family office. The issues are the same, but you need to be able to coordinate all of those players, your estate attorney, your accountant, all your deal sponsors. A lot of the investments that our families make into Verivest, fund administration clients, those are all part of what I call a virtual family office. And so how you communicate to all of those players is becoming a much bigger and a much more real thing to, families that aren't big enough to have their own single family office. And I think that's been another big element of why we have felt compelled, and I have felt compelled to make this move that we did, and why we've done it, because it's just what I feel is a necessity almost today. If you plan on keeping your wealth and making sure it lasts for you, at least while you're alive. And, for most of our families, they have some charitable aspirations, how they integrate their kids and maybe grandkids into it. The world has just become a lot more complex today. Yeah. And so it requires a different level of support. And that, I think, is requiring a different type of communication than what we've ever had to do, or have needed to keep a constant feedback loop of communication as a high net worth family today.
Yeah, that's right. And I think too, and if you pick up on this, right, is that there's this need where you need, like what Ryan's saying, that the notion of the virtual family office is solving a need. It becomes too much. There's too many moving parts for any one person. So, you come in and you become a client of Sunlight Peaks as an example. Now, the reason why, the Securities and Exchange Commission says, well, if you're going to do that, you guys need to become registered investment advisors. What that means is that they're now overseeing Ryan and his firm. Anyone who's a registered investment advisor, every couple of years, they're going to come in and do an audit. So really, it's and you probably pick up on it. Just think about what he just said. He basically means families are giving Ryan and his firm and his employees the keys to the kingdom. That's often what is happening, right? Meaning, so now good guys like Ryan, of course, have no intention of doing anything wrong. The problem is that not all people are good guys, right? They're sort of, they can do bad things. So I think that it's one of those things to realize that that's what's happening now, is that, that Sunlight Peaks is now kind of unlocked the regulatory regime that is the SEC, and they need to follow the rules, and they're going to come in, and that oversight is there. Now, it's important to understand that the vast majority of the market, deal sponsors in particular, are using exemptions from registration, meaning for whatever reason, the exemption to securities laws don't require them to have to become, investment advisors or, to run their transactions through like a broker dealer, meaning SEC and FINRA are not really, actively overseeing these parties. They're in the unregulated sort of realm, and they're using exemptions from having to deal with that, or to have to be overseen by those. So that's really where I come in. That's what I'm passionate about, right? Is that most of this segment, and real estate in particular, just is unregulated. Sure, they've got to let the SEC know if they're selling securities to, U.S. citizens, and they got to let the states know that they're doing the same. And, but at the end of the day, it's really nothing, right? And really, until something goes really, really awry or bad, or they're running a Ponzi scheme or a pyramid scheme, or, it takes a lot to sort of, which is sad, but the resources at the SEC are finite and limited. That's why they have some of this stuff in place. Is just, there's just not enough money, enough budget to go around to oversee the whole thing. And as a country that believes in capital formation and entrepreneurship and all those things, that's always the fight, is that we want to ensure that capital formation occurs, that money's being invested. And, I know you're passionate about that too, Ryan, is that it's getting money in the hands of these entrepreneurs so they can go do great things. That's what makes this country amazing. But from my standpoint, I always look at it like, having been a participant in this unregulated space for as long as I have, my concern is that what governments do over time is they begin to overregulate. Why? Because people do bad things. People don't play by the rules, and they're basically forced then to regulate. Well, then that stymies, all sorts of activity. And for me, very specifically, means that it'll end up negatively impacting investors, meaning their access to these things will go away. We already have that dynamic. You have to be accredited to invest in many of these things, because this is their easiest way for them to protect and to not have to regulate, is just to not allow them to do it. So I think that's important to realize, is that's what Wade Verivest do, or basically it's regulatory light, it's audit light. It's like, what can we do? We follow the money, we watch where these assets, we do the things that, you sort of, you're looking at the spots where bad things can happen, and you're limiting it to where, the risk is the greatest, but it's not, once again, it's not foolproof. And we certainly we don't have the budget of the SEC, or even though it's limited for them. It's just, these are these things you have to realize that a lot of guys like Ryan and myself are trying to navigate at times, and asking more questions and seeking to understand why we do what we do, or why certain things are structured. A lot of times has to do with, because we're trying to work, within the confines of some regulatory regime.
Yeah, that's well said, Lance. And that's something else I've just learned and realized throughout this process, is that for investors who we serve anyway, they manage their own assets. They are the ones that ultimately make the investment choices. They are the ones that, when they decide to make an investment, they wire the money from their accounts. And I think that's another big element, as I've seen this, as we've seen more families start to understand and realize some of the assistance, that support that they need, given the complexity in their financial lives. They think they might be turning over the reins, the control of their wealth over to us or somebody like us. And the reality of it is, you don't have to. And in our case, you're not.
That's right.
And that's, I think, is just, you talk about communication and over communicating. And Lance, is just one of the things I so appreciate about you, is that you're not afraid to tackle these topics and just talk about these things, as in the spirit of helping us all learn and get better. And that's probably been one of the biggest things that I learned, is that as high net worth families choosing to invest in alternatives, and specifically real estate, we typically want to control our own wealth.
Yeah.
And just because you engage, with a registration or something like that, doesn't mean you're losing control over anything. No. It just means you're looking for something more to fill in some gaps that you've identified in our case, with your wealth, that you need help with. But the regulatory body in this country, kind of has one label that covers a wide swath of a lot of things, and we tend to get sucked up into that wide swath. Yeah. And then that doesn't necessarily, communicate what is actually being done, or what the reality of the situation is here. And so, I'm still a big believer in capitalism. Today, I agree, Lance, it's what makes our country great. But I'm also a big believer in wealth. Regardless of the size of your wealth, you have to be in control of it.
Yeah.
But what you have to have is the right people around you to help support it.
That's right.
And that's, I think, this whole new level of complexity that all of us are facing, Lance, that at least when I started investing in real estate, it wasn't that complex, or at least relatively speaking to the way it is today. In regulatory change, whether you like it or not, or whatever side of the aisle you happen to sit on, or if you don't sit on any side of the aisle, whatever you think about it, regulation isn't going away. And I think there's going to become, because of, like you said, Lance, just the amount of bad actors and bad boys, so to speak, that are out there. They're even out there right now. And even in one of these longest bull runs of both, traditional investments, real estate investments, and otherwise, generally speaking here over the last 11 or 12 years, we haven't begun to see some of those bad actors emerge. And I think it's just part of what we need to be ready for. And, as long as you're doing the right thing, it's nothing to be scared of. It's nothing to be afraid of. Either from an investor's perspective, or some sort of a service provider perspective, or a deal sponsor perspective. You just have to understand how to work within the rules. And I think from an entrepreneur standpoint, to be really true to yourself, what lane are you running in, and what service are you truly providing? And as a high net worth family, what exactly do you need? And I think that's why this communication process, and part of why we've done what we've done, Lance, is to help foster just more open communication inside of our families, inside of our clients, because it's part of what is missing, I think, to help gain as much clarity as possible to make really good, sound financial decisions, whatever they happen to be.
Yeah, I agree. And I think that it is a loaded term, especially in the wealth management space. It's just, these are wealth managers, are usually investment advisors these days. We've seen a huge migration from sort of financial advisors who were, commission-based stockbrokers, right, to investment advisors who are now managing wealth. And so a lot of people did set it and forget it. They didn't control their own wealth, and they put their money in the hands of these wealth managers who, once again, right or wrong or whatever, but they had limited product on the shelf. I think that's the other thing, is that the public markets have become very, very, very efficient in the last 10, 15 years. And it's hard to generate alpha. It's hard to do whatever. So you're paying somebody who has, a shrinking amount of product on the shelf to choose from, and they're just plugging it in. And I think that's where you see, obviously, the private markets have only increased in size, right? The amount of activity going on in the private markets. So really, it's not a surprise to me that there would be some confusion, right? Like, and especially going from an investment club to sort of an investment advisor with people as to like what's going on, because they're going to frame it to, are you now becoming like these wealth managers of yesteryear that just basically took my money and it's like, no, we're seeing a new breed of firms like Sun Lake Peaks. And I want to see more of it, right? Because it is that personal touch that can really say, it's kind of like what happened in holistic medicine. It's probably why I always use the word holistic. It's just, you use comprehensive, I say holistic, but it's sort of the same thing that happened in medicine, right? Is that doctors, same thing, they're constrained by, drug reps coming in. We got to push these sorts of prescriptions, whatever. And they weren't looking beyond sort of just how do I medicate to, with prescription drugs, but to like, how can we medicate with, eating healthy, just the holistic, and so we've now seen sort of that transition taking place more and more, certain parts of the country more than others, I guess. But it's thinking about it more holistically. And so it's good to see. So I'm glad you guys made the transition. Where can people now find you and learn more about, what you're up to? And I do encourage any of you who sort of kind of fit maybe that box of 3 to 30 million, you're getting a little overwhelmed by, just once again, this whole management of how you deal with all these issues that we've talked about today, to at least reach out to Ryan and his team just to see if there's a good fit or there's something there. But how would they go about doing that?
Sure, Lance. I think our website is probably a really simple and easy step for anyone to take who wants to learn a little bit more. Sunlightpeaks.com, and you can start to get a little bit more of a flavor. But we're really, it's all about the personal one-on-one, Lance, and that's a big thing that I've realized here too, that we want to be able to provide, and that offer it's about one-on-one support. And we like to have a conversation. We're real people and want to have a conversation with real people and try to break down some of the technological barriers that can cause miscommunications and not foster a full open dialogue, and realizing, Lance, none of us created our wealth overnight, and nothing, is going to be immediately changed about our wealth overnight either. And I think that's a big, realization where a lot of families are at today, in recognizing that it's a process, and it's going to be a methodical process to be able to go from point A to point B. So happy to visit with any of your clients, any of your families in your community that feel the need to do so as part of identifying how to live their biggest and best life with significance.
Awesome. All right. Well, yeah, we'll have you on here in probably another 4-6 weeks. So until we hit another and tackle another topic, but congratulations again on the transition. I know it was a ton of work and a lot of planning that went into it, and glad you made it to the other side. So thank you so much, Ryan, and have a great day.
Thank you very much, Lance. I appreciate you having me. Take care.